Welcome back to the Mortgage Mentor podcast. We are blessed to have a guy that's been with me from the very start. Very loyal loan officer, Mr. Kyle Garman. A crash isn't really being forecasted by any of the experts in our industry. 3 days, 10 days before you get your keys and find out there's a hiccup in your loan.
It's a double-edged sword. Yes, lower interest rates could potentially offer you lower monthly payments.
Some myths that we see in our industry.
The myth in the mortgage industry is that you need 20% down for your down payment.
Oh yeah, that's... Yeah. All right, guys, welcome back to the Mortgage Mentor podcast with Greenhaven Capital. I'm Kevin Otto, your host and mortgage expert. And today we are blessed to have a guy that's been with me from the very start, my main man, very loyal loan officer, Mr. Kyle Garman. How you doing today, brother?
Good, man. How are you?
Good, man. Thanks for joining us. Yeah, you took a long trip, 10 steps from your office. So
yeah.
Appreciate you making that trek to join us today.
No problem.
Yeah. Well, let's just get right into it. Can you start off by telling us a little bit about yourself and how you got in the industry?
Yeah, my name's Kyle Garman. I've been in the industry, 16 years now, I'd say.
Yeah.
16 years, give or take. Have 3 young kids. I got twins that are about to turn 4 next month. I have a 7-year-old. And life is good. What can I say?
Life's good. Life's busy.
It's busy.
Busy with family.
Hectic.
Yeah. Busy with work.
Busy with work, busy with family, coaching soccer, working out every day. So it's not much time off.
That's awesome, man. Sounds like you got a good work-life balance going on. So that's good. So let's just hop right into it. So the market's crazy right now. Things are changing. But, what are you seeing the biggest mistakes that buyers are making right now?
For sure, the biggest mistake that I see weekly is buyers are paying way too much for a lower interest rate.
So permanently buying down their interest rate.
Yes. Yeah. Yes. And what I mean by that is they're paying either points, discount, junk fees, processing, whatever it is. They're basically paying the loan officer those fees to get a lower interest rate when interest rates are kind of at their peak right now. So it doesn't make financial sense.
Yeah. I mean, they're starting to come down a bit, which we've seen and which has kind of been expected. So yeah, I mean, I think what people focus on a lot is just an interest rate, but they also need to focus on the costs associated with the rate and seeing how long it actually takes to recoup those costs and make buying down the rate worth it, right?
For sure.
Yeah, and I did the math. It usually takes at least a few years to make it back.
Yeah, I just don't think it makes financial sense to pay thousands and thousands of dollars right now to get a lower interest rate when everyone knows interest rates are going to be lower in the near future. Why wouldn't you wait maybe a year, maybe less, to get a lower interest rate at a less cost?
I agree. So what are some solutions that you're offering your buyers right now?
I give them both options. I say, Listen, if you want the lowest interest rate possible, here's what I can get you, but these are the costs associated with it. Or what I would do in most situations, there's always exceptions to the rule, but with most situations, it's here's a slightly higher interest rate, and here's significantly less costs that come with it. It makes more financial sense in the market right now because I can refinance you in the near future.
Yeah, I'm doing that. A lot of things I'm doing too right now is doing temporary rate buy downs too, temp buy downs. So I've actually done a few lender paid rate buy downs where client gets a lower rate for the first 12 months. They're anticipating being able to refinance in the next year. So that's worked out well too, right?
Temporary buy downs are a great option. I have nothing against those. What I have a problem with is when people are permanently buying down their interest rate when the rates are very, very likely to be lower in the near future. It doesn't make financial sense. They're going to look back and regret paying $5,000, $6,000 for a lower rate when they could have got it for free maybe 9 months later.
True. So any other mistakes you're seeing buyers making right now?
Yeah, the other big one I see, and I still hear, and I've been hearing this for the past 10 years, is clients waiting for the market to crash.
Yeah, that's a good one.
I can't tell you how many clients I have that are pre-approved and have been pre-approved for years. Financially, they're ready to go, but maybe they're getting advice from their uncle saying, you should just wait a little longer. The market's going to crash, but I don't see a crash in sight, and I haven't for the past decade.
Yeah, the data really doesn't point to that. I mean, the market's still relatively strong. Mortgage delinquencies are low, inventory is low, but demand is strong. Anything could happen, but yeah, a crash isn't really being forecasted by any of the experts in our industry
How many
right
times
now.
have you heard that over the
I
past?
mean, people have been waiting for that for the last 10 years. And had you bought a house 10 years ago, you'd be sitting on a buttload of equity right now,
100%.
right? I mean, I bought my houses 10 years ago, and gosh, that was probably some of the best purchases I made. And even when I did buy those houses a long time ago, guess what? People were still saying it's kind of high right now, right? Because to me, I feel like the best time to buy real estate was yesterday, right?
Yep.
You know, our parents got houses for 50 grand, right?
Yes.
You know, but that's not going to happen anymore. I might have paid 500 for my house, but maybe that house is worth close to $1 million now. It's just crazy how inflation works and how, you know, prices of homes are going to continue to rise over time. There's always dips in the road, but it's near impossible to try to time the market at the perfect time and place.
It's impossible.
Yeah. I agree. Another one I wanted to touch on real quick on some mistakes I'm seeing is buyers that are just really waiting to get pre-approved or not doing thorough pre-approvals and really maybe balking at sending certain things that we need when maybe another lender may not ask for them, or maybe miscommunicating a pre-qual from a pre-approval.
Absolutely.
Yeah.
I know it. Like our company, we make sure the pre-approvals are ironclad.
We damn near underwrite the loans up front, right?
We definitely don't leave any stones unturned.
For sure.
And we try to get all the docs up front. That way we can guarantee a smooth and fast escrow for our realtor partners and the buyers.
And especially the buyers. You don't want to be hit with surprise, 3 days, 10 days before you get your keys and find out there's a hiccup in your loan.
Yeah.
So when we do pre-approvals, yes, they are very thorough. So if we're asking for other documents that maybe another lender hasn't asked for, it's for good reasons. It's to protect our clients, I think, right?
Absolutely.
Yeah, make sure that nothing goes wrong with their loan. So that's great. So next off, I want to talk about market predictions for 2025. We're in August 24 right now. What do you see going next year?
I mean, obviously lower interest rates. I see inventory picking up. I think that a lot of sellers have been hesitant to put their house on the market over the past 1.5 to 2 years because interest rates were so high.
Mm-hmm.
I think a lot of people have gotten more used to these higher interest rates. And I think now that interest rates are likely going to start coming down, I think that maybe some sellers that had been holding off may get off the fence, which should open up inventory for sure. So I think definitely lower rates, more inventory, and I think just more of a normalized market.
Oh, so yeah. I'm already starting to see a couple refis right now. So as rates fall, I think we're going to see more refis. So what would you tell someone right now that's saying, you know what? Kyle just said, rates are going to be low and there's going to be more inventory. I'm just going to wait till next year to buy. Would you tell them to wait, or would you tell them to buy right now?
No, I would definitely tell them to buy right now. And the reason being is when interest rates drop, all the buyers that have been waiting on the sidelines are going to come out of the woodwork.
Yep.
And I can't tell you how many clients I've spoken to over the past 2 years that are kind of waiting for interest rates to drop more to get into the game. But I keep telling them it's a double-edged sword. Yes, lower interest rates could potentially offer you a lower monthly payment, but at the same time, it's going to create bidding wars on the houses, which then gives higher prices. So are you even really saving money?
Yeah, exactly. So I think what you're saying is it's probably better just to try and get in the game right now and then maybe refinance later when rates drop. And if there is a bidding war, their home value will even go up even higher, which will allow them to get maybe even a better rate on their mortgage.
Absolutely. And I totally understand some people, it's affordability. Some simply can't do it. But those that can actually afford to buy a house right now, I wouldn't try to time the market. I would get into the house as soon as possible. And then we can refinance you when interest rates do drop.
For sure. And then honestly, too, it's like everyone's speculating rates are going to drop, but it's not guaranteed either, right? So, I mean, people have been saying rates were going to drop, in 2023 and even this year, people were forecasting years ago that they were going to be lower than they are now, which they are making their way down, but there's no guarantee. So I agree. I think if there's, a way for you to get in now at a payment that you can afford and you feel comfortable with, you should definitely explore your options, because the payment you lock in now it's not going to go any higher.
Yeah.
Right? You wouldn't refinance to a higher rate or anything. So why would you do that, right?
Totally agree.
Yeah. So I agree with you on that. So I think we are headed towards lower rates and hopefully more inventory and a stronger market with more buyers flooding the market. But now let's talk about some myths that we see in our industry. There's a lot of like mortgage myths or misconceptions, people not really knowing what's true or not. There's a lot of information just floating on social media. So what are a few mortgage myths?
I think the biggest myth in the mortgage industry is that you need 20% down for your down payment.
Oh yeah,
and that's something that kind of like all our parents told us a long time ago is save for 20%. That way you could avoid mortgage insurance. But the truth is mortgage insurance is pretty cheap these days. And in fact, you can also get, sounds crazy, but you can actually get a lower interest rate if you put less down in some cases than 20%.
Yeah, that's true. Just based on the way the loan level price adjustments work. So sometimes the actual mortgage prices out a little bit better with less down as opposed to 20% down, depending on your scenario. Yeah, that's true. So any other myths that you've come across that you know?
I mean, you still hear all the time that you need great credit to purchase a house. That's not true at all. FHA is a great option for people with lower credit scores. Me and you, we've closed hundreds of loans with people that are below 620 credit over the years.
Correct.
And
even in the 500s we've done that before, so it's possible.
We've done 560, 540. Those loans aren't easy to do, but we can get them done.
It's possible.
It is, for sure. So it's definitely not, you don't need an amazing credit score to buy real estate right now. We have options. We're a broker, so we have so many different lenders that we can send your loan to. But also what we try to do too is credit repair. So if you do have a terrible credit score, there is options where we can help you boost your score to get you a better interest rate and a better deal.
That's absolutely true. We run rescore analyzers to people. Say, hey, you pay down these 3 cards, you do X, Y, and Z. Your score goes from maybe a 560 to a 640. This just puts you in a whole nother ballgame, right?
I feel like we're kind of like credit experts at this point.
We could run those things. Yeah, we could definitely give people the tools that they need to make the right financial decisions, to put them in a house and get them the best financing. So that kind of brings me to my next question is like, I talk to a lot of buyers and all they're focused on is rate. I talk to XYZ mortgage company, in New York or in Michigan or, wherever they are, just from a call center. They're going to give me X rate, this. They're only focusing on rate. Can you maybe tell us why it's important not to just focus on rate, but actually have like an advisor or a mortgage expert that actually is experienced and knows their local market?
Compare it to the airlines. If I wanted to take a flight somewhere, if I wanted to pay the least amount, I'm going to go on Spirit Airlines. Is that going to be the best flight? Is it going to be the best?
It's going to be a bumpy ride.
It's going to be, yeah. So that's kind of like what the mortgage process is like. You're always going to be able to go online and somewhere out there, you will find a discount lender that will give you the lowest rate. They're not going to make much on your loan. So what type of service are you going to get? It's definitely, we're advisors. We're financial advisors, and every single client and scenario is different. And you have to know how to structure the loan. You have to be available for your clients 24/7, nights, weekends. You have to basically, especially first-time buyers, you have to hold their hand through the entire process.
Yeah.
And I definitely think that you obviously want to for sure get a competitive interest rate, but if there is a lender out there that's maybe offering a lower rate than I am, what type of service are you going to get? And are you even being put in the right loan?
Correct.
So there's a lot that goes into it. It's definitely not who can get you the lowest interest rate because, like I said, there's always going to be a lender out there that will get you a lower rate. But are you going to be happy when the transaction closes? Or it may not close at all.
Exactly. There's a lot of people that are they'll just tell you what you want to hear, that could bait and switch you, that'll just do anything that they can just to get your business when they really don't have your best interest in mind. So to me, it goes much more about just rate. It's about the whole loan, your whole financial experience, understanding your finances and putting you in the best position. Maybe it actually is better for you to take a higher rate and for us to pay all your closing costs than for you to get a par rate with no cost or even paying points. It's just knowing how long you're going to stay in the loan or stay in the house. So just taking the extra step, the extra measures to really understand, what your goals are, I think is vital.
Yeah. And so many times I've heard clients say, okay, this lender's offering me this interest rate. I get the loan estimate or the fee summary. They send it over to me. I look at it and they're paying an arm and a leg.
Exactly.
In fees.
We can beat it.
I can beat that.
Can beat it.
If you want to get the lowest rate possible, guess what? I can actually beat this offer you're getting and charge you fees to get a lower rate, but it's not in your best interest.
Yes. So don't just focus on rate is what you're saying, right?
Absolutely.
Let's focus on the full financial picture. Let's look at exactly what you're looking to do.
And most importantly, work with somebody that you're comfortable and confident in.
Yeah. This is one of the biggest financial purchases someone's going to make. So we want to make sure that they're
for sure
aware. So,
yes.
So yeah, man, just want to wrap up, man. Thanks for taking the time today. I know you're busy with everything, but if anyone wants to get a hold of you to get a mortgage, what's the best way for them to contact Kyle Garman?
I would say just text me, 916-747-6435. You can also reach out to me on Instagram or TikTok. Just send me a message.
Okay, man. You heard it first. Got my main man Kyle here. Appreciate your time. Thank you again for tuning in. If you guys had enjoyed this podcast, please subscribe and tune in for more real estate and financing news. Thanks, guys.